Hello everybody, Brian from Bear Bull Traders here. This is June 25th. We're almost halfway through the year here, and of course this is the weekend video. We had a pretty good week this week for the bulls. So let's get down and take a look what happened last week and then look ahead and see where we might be going next week. So let's start out with a quick recap of what happened last week. We had Chairman Powell testified in front of the Congress. Really nothing of note. He just stuck to the script. And so nothing really came out of that. On Monday, the markets did find a bit of a bottom and then started to move higher. And we had some really big gains Thursday and Friday. Friday, the Dow added 800 points. It was a major rally those last 2 days. And one of the things that happened to cause that, consumer confidence came in slightly lower than expected. Of course, bad news for the economy is what everybody's looking for right now, a slowdown. And of course, that's good news for the market. So that's where we got that bit of a kick amongst other things. And you can see here, this is how we fared on the week. Pretty much got back all the losses that we had in the previous week. So a nice bounce back there. Most of the areas finished in the green, most sectors. Consumer cyclicals, which don't know if I spelled that right, and healthcare led the way. These consumer cyclicals, they're the ones that are at the bottom when the market's going down, and they seem to be the ones that bounce back when we bounce back in the markets as well. Energy continued to get hit for another week. That was the only sector in the red, but could be getting into an area of possible support here, and there's still issues with supply and demand. Demand outstripping supply, and so it's got to find a bottom here somewhere. It's my theory. The 10-year Treasury note, we did pull back. We pulled back from the 10-year almost got to 3.5, and that's why I think one of the reasons the markets were struggling. But this pullback, of course, gave us a bit of relief, and the 2-year was down as well. Again, probably this pullback in the interest rates on the Treasuries probably helped boost the markets as well here. We did end up with the US dollar slightly down in the week, and of course it goes up and down with these interest rates. Higher rates go, the stronger the dollar gets. More demand for the dollar, basically. And Bitcoin is kind of settled down this weekend. It's still sticking above this sort of 20,000 level. We had a pretty wild ride last weekend, but seems to be relatively calm right now. And before we get into looking at some charts, as always, do a quick ad for my book on Amazon, How to Swing Trade. If not How to Swing Trade, that's the old one. Profiting as an Active Trader, my new book on Amazon. The old one's still there, but this is the new one that's available for your perusal. So let's move on and take a look at some charts here. And here we go, starting out with the treasuries. You can see here we did back off, as I mentioned, on the 10-year and the 2-year. Had a down week prior week, and now this week was further pullback. And again, this might be signaling some concern that maybe we're heading for a recession. That's interest rates start to drop, and that's usually the response when they think we're heading into a recession. So not necessarily going there, but that seems to be what maybe the bond markets are starting to think about. So we did pull back from this 3.5 level, and that kind of helped the markets along as we ended the week on a much more positive note. And speaking of that, let's start out with the transports. Always like to look at those because those kind of lead the way in terms of an indicator for economic activity. And you can see here, big move on Friday. And of course, this was partly due to FedEx. FedEx came out with some pretty good numbers, top and bottom line, and they also guided fairly strong. So that was all the market needed to hear on that. They bought FedEx throughout the day. And you can see here the transports have bounced back here from this low. You can see here we are still trending lower, no matter how you look at it. There's your upper trend line. We're way above or way below that, and there's your lower trend line. We're getting back up to it now, but you can see here how we pop back up and then rejected from it. So it'll be we'll be keeping an eye on those lines and see where we go if and when we get to them. Again, the Dow, sort of the same thing. I drew in some trend lines here. You can see we're still even though we've had this really nice bounce, we might end up, in the same situation here, bounce back up, churn across to this trend line and then drop again here. But for the time being, it looks fairly positive. Momentum indicators going to the upside. You can see the stochastics, our MACD seems to be turning. It's almost going positive here. So Dow looking pretty good and probably going to have probably a decent week next week. It's my guess. We're probably going to continue our little bit of a trend higher here. And again, you can see on the weekly, the only thing you can say here on the weekly is that the volume wasn't very good on the Dow, and I think we'll see that on all the indexes. Qs are a little more choppy, and again, we're getting some term and some momentum indicators. It's really hard to, there's a trend line here, and we actually broke it. And if you do a larger trend line here, we're kind of up to it. So Qs have been a little bit more erratic, just because they tend to be, we tend to be going up and down more with the market pullbacks and bounces. The Qs tend to be at the bottom of the sectors when we're pulling back and leading the way higher when the markets are bouncing. So that's why we're kind of seeing a little more erratic action here. The SPY again, not bad volume on the day. Let's take a look at the weekly. Again, weekly pretty light volume compared to this down week last week. So lighter volume kind of indicates less institutional participation in buying, which is not something you want to see when you get a bounce. You want to see more some of the institutions maybe making some investments and putting some money to work in the market. And at this point, it doesn't seem like a lot of them are ready to step in yet. Again, the IWM, you can see here this better defined trend line, again going lower. Momentum indicators are hooking up here, all of them, but again, we're well below that downward sloping trend line. And again, you can see a little bit lighter volume last week compared to the week before when we were going down. So again, sort of a sign of lack of institutions participating in that buying. And you can see here we're making a bit of a, in terms of this is a daily chart, but in terms of that, we are making a series of higher lows every time we pull back. We tend to pull back at a higher level on the VIX. We still have not seen this massive breakout that everybody's kind of waiting for before saying that the bottom is in. But again, this sort of 35.5 level just seems to be an area that, or 35 area that the market just seems to, every time we get up there, it pulls back again. So what this is telling us, basically, is still no fear in the market in terms of a big sell-off. The dollar, again, kind of, we've had some pretty erratic moves here, but you can see here we pulled back this week just slightly. And Bitcoin, you can see here this massive move down last week, big bound, and then big rebound back up. And again, we just seem to be kind of chopping around here this weekend. No notable activity to speak of on a daily or a weekly chart. Okay, so what I'm watching next week, let's take a look at some stocks here. Amazon, I had this on my chart last week. Fortunately, I didn't take a trade on it, but I'm still looking at these. It's put in and a really nice bottom right around 100 here. I can see it getting back to 120 if we continue to rally next week. But selling some calls down here, puts down here, I should say, selling some options. And it seems like it's got support there, so that's another strategy to take advantage of this nice bounce that Amazon has had. What else? CHPT, still long CHPT. Still liking this one. We had a bit of a pullback and still trying to get through this prior high right here. I still like it. I still think it has some potential to run. Next level probably somewhere around this 200-day moving average, 1750. And then could go as high as 20 would be the next area where we'd see some probably pretty significant resistance once it got through there. But charge point, a lot of option activity in this as well. That's been noted by some other people. And yeah, seems like a popular options trade. Anyway, Ford. I was looking at Ford. Ford is so cheap on a fundamental basis. I mean, it's trading at, sort of 5.5 on a PE. That's just absolutely incredible. I don't know. It just seems like it has been in a downtrend. I traded it last year. Uh, got a nice move out of it before it started to pull back. And again, it seems like I don't know how much cheaper it can get, but at a PE of uh, you know 5, it seems like too good of a deal. So maybe you could sell some calls or buy puts, I should say. I keep saying calls. Sell some puts down here around 11, and you might end up owning it. But it does look like it's trying to hold a base here. You could also look at some leaps, which would be long dated calls. So go out to next year, maybe buy some 14s or 15s. But I just think that this is just really too cheap and has some long-term potential. IBM had a nice pullback for the last couple weeks ago, and then found a base again. And again, this could be an options trade. This could be just a straight buy, but it does look like it's this level here at 140. It does, Friday it just definitely roared through there on volume, and like to see volume confirm price action. So it tells you institutions are at play. And Nike, we've got earnings after the close on Monday, so this is going to be interesting. 105 seems to be a base that it's sitting at. So there's, consumer demand has been strong, but then again, how has the whole China situation impacted Nike in their sales over there? So, it's really hard to say what Nike's going to do, but possible options trade after earnings. And going into it, I'm a little bit nervous about it. This 120 level looks like in a key area, and somewhere around 100 looks like a key area. So it'd be interesting to see what they say. One of the members in our room brought this up to me. Philip Morris brought it up to me on, I think it was on Thursday. I actually bought some because I really liked the fact that it was starting to break out here. Here's a prior level of support in this area where it kind of churned, and then we just had a really nice breakout on Thursday, and Friday did pull back. It made a big surge right at the end of the day and then just pulled back after that surge. But nice move on Philip Morris, which I still have some of my shares as well, and wish I could remember what member gave that to me, or asked me to look at it. But thank you for that. Power of a community. TQQ, mentioned I was long that going into Thursday. Going in through Thursday, we had a nice pop, and then we had that rip Friday, which just held some of it through that rip, and I think we'll probably get a bit of a continuation move back higher on Monday, and we'll see what it does from there. But right now I'm just trailing my stop on that one. I mentioned energy possible, or at least I'm going to mention energy as a possible bottoming action here. Maybe we've had this nice stair step up, precipitous fall, like a lot of the commodities have done, with the thought that there's a looming recession, lower economic activity, but there's still a supply-demand issue with oil and energy in particular. So I'm thinking maybe we're finding a bit of a bottom here. So one way to play that, of course, is XLE, which is the energy sector. This is a lot of the big name companies like Exxon and Chevron in this ETF. So you can play that with that way, or you can. I think XOP is another one. Let's just see here. That's the oil and gas explorers. You can see how badly this has taken a beating, but again, we're kind of down into an area where I would expect maybe to see some support here, and we had a bit of an up day, although albeit we finished well off the highs of the day, unfortunately. But again, some big volume here, big distribution of people getting out and getting in, and let's take a look at this last one that I had here on watch, and that was healthcare. Healthcare's had a really nice bounce back here. We've been talking about this in the room, and we're back into a bit of a range here, so looking for maybe a bit of a pullback, maybe down to say 125-ish, which would be sort of 125. Yeah, 125-ish would be a good area to if we got a pullback to enter, and this could be some sector rotation going back into healthcare after it's been a real dog over the last couple months here, 3 months. It's been after this nice run up has just been a bit of a disaster. So maybe we're getting a turn here and money's rotating back into healthcare. So wrapping things up here, what do we got to watch next week? These are your current levels on all the indexes. Here's the areas I think are sort of immediate support and resistance. We're right in the middle of support on the Dow compared to support and resistance. Pretty much the same for all these indexes here. We're kind of in the middle of support and resistance, so mid-range here. Same with the IWM. So these are areas that we can watch. Economic events. I think the big one's going to be up on deck on Thursday when we get this personal consumption expenditure price index, which is something the Fed watches fairly closely for signs of inflation or cooling of inflation. So if this number comes in hot again, it will not be good for the markets. Means the Fed will have to be more aggressive in the future, or if it starts to show some cooling, which I think everyone's hoping, that will probably give a boost to the market. So we'll be watching that on Thursday for sure. Earnings this week, we do have a few interesting ones. We've got Nike on Monday after the market close, Trip.com on Tuesday, Bed Bath & Beyond, one of those old meme stocks. And Thursday we've got Micron. So a couple of interesting stocks coming up this week. And that's it, everybody. I hope you're all having a good weekend. It's finally summer here on the West Coast, up in the north. And I hope you're all having a good weekend as well, enjoying the weather. And of course, will be opening the room live on YouTube at 8 o'clock on Monday morning. And of course, you'll see the pre-market show and then into the open at 9:30 with our members. So have a good rest of the weekend, everyone, and hopefully we'll see you Monday. Bye for now.